Inflation is declining to 2%, according to the Fed. As far as Donald Trump is concerned, inflation is already dead and gone. Enough said. If you listen to gold, inflation is not only going to persist, but it will worsen. People will start purchasing precious metals like gold and silver when they realize things are only going to get worse. What the heck? If there is a $2 rally, which is easily achievable, silver could be above $50 when Monday's market opens. What the heck? Possible price of gold is $3,900. It might cost around $4,000. I mean, that's where I anticipate it going. Put some money into gold and silver. Buying silver for less than $50 and gold for less than $4,000 might happen for the last time this weekend. No promises. Perhaps it will fall this week if you're lucky. You have no idea. Putting my money on it would be a mistake. In my opinion, this trend will persist. I fail to perceive any rationale for the continued ascent of gold and silver prices. Until next time. The fact that gold is continuing to climb steadily toward the $4,000 level indicates that inflation is still very much out of hand. Precious metals prices reflect the world's deep structural imbalances, even though official narratives say prices are going down. As the value of currencies declines and trust in monetary authorities wanes, gold and silver are reacting not to short-term speculation, but to this trend. In preparation for the inevitable future inflation and debasement of currency, central banks and astute investors are amassing metals. Not only does price affect gold's movement, but prominent economist and Euro-Pacific asset management founder Peter Schiff cautions against this. Legislators continue to deny this reality, and it reflects that. He contends that central banks and political parties alike fail to recognize the tenacity of inflation, while investors who cling to digital or fiat alternatives like Bitcoin fail to see the true hedge. Schiff points out that physical assets are reclaiming their monetary role as faith in paper promises wanes, and that this is supported by the fact that gold and silver are steadily climbing, with silver strong near $50. With this trend picking up speed, the focus is shifting from short-term gains to more tangible, long-term benefits. Schiff thinks that individuals who are holding out for another dip run the danger of falling behind as demand from institutions grows and accumulation increases. The point is well made. Precursors to the subsequent stage of this monetary transition are precious metals like gold and silver. Here are snippets from the interview with Peter Schiff. Please subscribe to our channel and enable the bell icon to receive timely updates before we continue to discuss this. Please take pleasure in watching the video. And that comprises a substantial sale. During yesterday's Yom Kippur trading, we saw a $2 per ounce sell-off. Due to silver's early morning rally, which saw it rise above $48, and subsequent rapid decline, a $2 drop to $46. I believe that low volume was a major factor in this. It was clear that they were wasting no time. Futures traders use stops when they try to trade with a lot of leverage and place sell orders below the market price so that they can cut their losses if the momentum changes. I believe that during the thin trading, when many Jewish people were not working, they were able to exploit that situation and expose many speculators. The mining stocks were also hit by that, and it created a great buying opportunity. The GDX and the GDXJ were both up 3.2% on the week. However, considering the significant fluctuations in gold and silver, it is far less than what you might expect. I attribute a great deal of that to Thursday's shakeup. My guess is that these stocks are poised for another big rally because some investors were hesitant to buy them today. The fact that we are only about $110 away from breaking the $4,000 barrier in gold makes me believe that we can do it next week. That is ridiculous, you know. Even silver is on the cusp of $50, just $2 away. If you're looking to buy silver for less than $50, this could be your last chance. The outcome will depend on us. Basically, I've been advising everyone on the Friday market wrap to skip Monday altogether. Purchase on the weekend. And if you had listened to me last week and made a purchase on Friday night, Saturday, at any time, or Sunday morning or afternoon, you would have gotten essentially the same result. But if you held off until either Sunday night or first thing Monday morning, gold was up about $70 on Monday. The silver price was soaring. We moved quite a bit. That was the bulk of the relocation. But after that, we keep expanding upon it. It seems likely, though, that something similar will occur again. That is to say, there is no assurance. On the other hand, Sunday seems to be a big shopping day. Many buyers are located outside of the country. For example, central banks often purchase gold at the beginning of each week. So, I anticipate yet another significant change. By the way, I would gladly make another purchase if you happen to make one last weekend or the weekend prior, correct? Sales at Schiff Gold have been increasing, as I've already mentioned to you. They're almost twice as much as they were before. However, considering the current situation, they are still far from where they ought to be. The mining stocks were relatively quiet this week, and I attribute that, in part, to the fact that cryptocurrency prices finally saw a significant upswing. At one point, Bitcoin was up over 12%. Bitcoin was about to reach new heights. Bitcoin exchange-traded funds actually reached new heights. Bitcoin, however, did not. At its peak, just below $125,000, none of those exchanges were dealing in the cryptocurrency. We were almost there, but we weren't quite there yet. Perhaps we'll reach that point right now while I'm recording this. 12,600 is the Bitcoin value. After reaching an intraday high, it has since fallen slightly. But I suppose some folks may have dumped their mining stocks and jumped into Bitcoin equities. This is going to be a bad idea, in my opinion. Despite the all-time highs, I believe it's interesting that you're making a lot of money off of gold stocks this week. Gold hits record high. Silver hits 14-year high. There were a lot of people who decided to cash out instead of jumping on the stock market bandwagon. Permit me to sell. Speculators selling off their holdings at the top is a good sign for a bull market, as is profit-taking. People, however, are exercising caution. They're cutting back on their stances. Nobody is in a hurry to make a purchase. This bull market is still in its infancy, and all of that points to that. We are far from done yet. However, the entire sell-off that we experienced occurred on a single day. Despite the fact that silver recovered from its low point, it was still negative for the day. On Thursday, a few gold stocks that had fallen 3, 4, or 5% actually rose in price. Most of them ended up negative, but they were far from the lowest. The funds needed to purchase the dip, thus poured in. It used to be that a drop in the price of gold could last for weeks. It wasn't a simple decline in gold stock prices either. Someone killed them. But now that so much capital is eager to enter this market, dips are short-lived and shallow, which is why I've been advising all my Shift Gold clients to just buy now. It was possible to catch a dip on Yom Kippur if you had been patient, but it didn't remain long. Even though it was a limited time sale, the price wasn't even close to what it was a week prior. It dropped all the way down to 46, didn't it? Near 46 degrees. Once again, we have surpassed 48. On the other hand, 50 ought to provide some resistance. We have this massive double top at 50, so I'd assume that's why, but it's anybody's guess. It wouldn't shock me if we broke through 50. However, my prediction is that once silver breaks through and stays above 50, Katie, there will be a significant rally, and gold will follow suit, correct? When silver is on the rise, it's not like gold won't follow suit. It will recover. Silver, in my opinion, is likely to continue its rally. Because I still believe silver is very cheap compared to gold, which is cheap compared to all the dollars we've printed, and all the dollars we're going to print, I've been trying to convince people to get some silver, especially if they haven't had any before. Yeah, that's crucial. You do realize that gold is trying to warn you about impending inflation? Inflation is declining to 2%, according to the Fed. As far as Donald Trump is concerned, inflation is already dead and gone. Enough said. Gold is a warning that inflation is here to stay and will only get worse. When more people see how bad things are going to get, they will buy gold and silver instead of these cryptocurrencies. I mean, for the time being, they are purchasing them. But in the long run, they will not. The smart money that believes Bitcoin can protect them from inflation will eventually come to terms with the fact that they need to purchase physical gold and silver if they are serious about hedging their portfolio. Gold then rose by around 3% weekly. So the Dow fell relative to gold. Actually, the third quarter came to a close earlier this week, just a few days ago. I believe the last one was on Tuesday. Did the quarter end on that day? On Monday, perhaps? Tuesday, number. On a quarterly basis, gold rose 17%. 17%. Consequently, when measured in gold, the Dow had a negative quarter. Even though silver's price went up 29%, we'll just price it in gold instead. I will simply need to commit it to memory for the quarter. There will be some inaccuracy in the figures. These are the numbers that I was going to write down, but now I can't find them. The Dow, however, is currently worth 12 ounces of gold. By year's end, it was probably worth around 17 ounces of gold. Thus, we are once again down by approximately 27%. Oh, sure, 27% year over year. 27% of the total value is expressed in gold. In the 2 years between the last quarter of 2023 and the last quarter of 2025, the price of gold essentially doubled. In other words, the Dow Jones did not double, although it did go up.